Money Vikings, Money Viking G here. Welcome back to the channel. Hope you're having a wonderful day. Hope you're taking care of yourself, taking care of those around you. That's all we can really do right now as the world reels from World War tariff. That's the era we live in right now, World War tariff. But the topic of the day is not about tariffs. I talked about that in the last video, or one of the last videos. The topic today is Bitcoin the only safe haven as the world falls apart, or the economic order is reshuffled, whatever you might want to call it, however you want to call it? Bottom line is that the current kind of economic global order is being shaken like a snow globe, and we're all in it, kind of flailing around, trying to figure out what the heck to do. So if you're a middle-class investor, middle-class wealth builder like me, you probably don't want to look at your 401k right now. You don't really want to look at your investment accounts because they got pummeled pretty hard last week. But you may want to look at your Bitcoin. So I've been talking about Bitcoin for many years on this channel. And for many years, I've held that it is a good part of a strategically diversified portfolio. I'm not a Bitcoin maximalist. I don't necessarily believe that it should replace the dollar, but I do believe that it has a place as digital gold. So I see it as gold. Ray Dalio would talk a lot about his all-weather portfolio many years ago. Kind of started basing and building my portfolio based on his fundamentals. And one of his fundamentals was, I think it was like a 5 to 10% position in gold, and as a store of value and as an asset that typically weathers various economic storms, such as the one we're in now. Over the years, I started to think that Bitcoin could be a better version of gold. It's a digital version of gold, and I think it's playing out to be that. So the bottom line is, in the current shakeout with everything going on, Bitcoin really didn't get shaken. That's the interesting part. So the first question people are asking, is this finally a decoupling? What I mean by that is, for the past so many years, Bitcoin's basically risen and fallen with things like the S&P 500, and specifically, I believe it's risen and fallen with tech stocks, and it's sort of acted like a tech stock. And it's not meant to be a tech stock. It's meant to be a immutable store of value with a finite supply that can never be changed. 21 million. There's probably about 19 million mined. There's about 6 or 7 million lost. So that puts you at about 12 million out in the world. A bunch of those have been gobbled up by large institutions and whales. I don't know, there's a few million left for retail investors to hold on to. Not many at all. So finite supply. But it does appear that there could be a current decoupling. Now, time will tell. We'll have to see how the next few months play out with the tariff war and the trade wars, and see what happens with all that. And if it rattles the cage of Bitcoin, but thus far it has not. Apparently people are holding on to their Bitcoin and they feel comfortable with it as a store of value and as a digital asset, the premier digital asset, I would argue. So that's very interesting. The other thing that's interesting is that Bitcoin continues to be in a bull market position. It continues to be in a rising position. I think it would have to drop back to something like 49, 50,000 a coin for that dynamic to change. And it's nowhere near that. It's quite the opposite. And in fact, if you look at some of the long-term chart trends, Bitcoin is actually absolutely fairly valued at the moment. It seems to be right on target, which seems to indicate that it has not hit a cycle top. So there seems to be room for further upward trends and a further top. But again, time will tell. So, I'm into long-term thinking, not quick this or that, and strategic diversification, which has worked out very well in this current downturn. Took some losses, but they've been mitigated by the ride your bike portfolio that we've talked about many, many times. And so those losses have been mitigated because of that. And they're not really losses because you didn't sell. So you only bake in a loss. You only capture a loss, you could say, when you sell. If you ride out things and you don't sell when it goes back up, you don't have any losses, of course. So that said, love to hear from you in the comments. Is Bitcoin the place to be during tariff wars? What do you think? Yes or no? Maybe? I don't know. What are your arguments for or against? I'd appreciate to hear your thoughts. Thanks. See you guys.